Morning, Dragon. Morning, Trader. Morning, Gian. Akko, what's up, man? Good morning. Miguel, how are you? Scottish. Prath. Pasquat, how are you guys? Hope you guys had a really nice weekend. I know I did. I was in Miami getting to hang out with Ted and Connor and Alec. Some people know him as People Wish. Had a really nice weekend. Weather was awesome. Brickell was great. When I got out there, my buddy let me use his Urus for the weekend. So had a nice car to drive. Fit right in. Realized the Toyota Prius just doesn't quite cut it. I've got a nice car at home too, but just getting like a normal, some like Camry or something to rent while you're in Miami would not really have fit in Brickell. And the old Rusty looks like it's going to break a little higher here. They've got a ton of supply to get through, but at least the market's on the right footing for now. Can we break lower at some point? It's possible, but if the market put in its bottom, we're already in some pretty good names, and I've missed some really good ones too. Like I was traveling and sleeping on the plane when Tesla triggered. Really, it even triggered on Thursday because I wanted like over 259s, and it kind of triggered late day Thursday, and then Friday, obviously huge day, and I was traveling, so I didn't catch that one. Kind of sucks, but that's all right. If it's going higher, it'll give more. Yo, good morning, Ted. Awesome weekend, brother. Thank you for joining us, and Connor. I had a super fun weekend. Dinners were awesome. Thank you for the suggestions. Thank you for making it enjoyable. Yes, sirree. Just getting started. Yeah, man. Thanks for the fun time. It was good. I know Alec and I seriously enjoyed it. Great question, Stock Maniac. I guess this one's going to be answered in a couple parts, so just bear with me. What are the essential parameters or elements to include when building a solid swing trading playbook? Okay, so you really have to think about a couple things, right? What's your objective, as a swing trader? My objective is to be in the best names in the market. right? I mean, and that's not always going to be the case where I end up in the best names in the market, but ideally, the best names in the market are in the best groups. And what do I mean by the best groups? I mean, if you look at the market group by group, meaning there's, depending on your resources, but anywhere between like 170 groups to 197 effectively. So just say to yourself, I don't want to be in the stocks that are going down more when the market's going down. And I don't want to be in the stocks that are going up less when the market's going up, right? You want to be in the stocks that are outperforming the market on the market when it's going up. And you want to be in the stocks that hardly go down when the market's going down. So naturally, that's going to put you in the strongest names in the market. So you're always focused on what are the strongest names? What are the strongest groups? Then how do you take it one level further? You could say to yourself, what stocks have the best earnings and sales? Why is that important? Because those are the names that institutions are most likely to buy for duration, meaning they're building positions in these great companies with great earnings and sales in leading groups. Leading groups is based on relative strength. So the reason that they're showing that is because institutions are getting involved. So if they're getting involved, then how do you take it one step further? They've got really good technicals and they've got really good fundamentals. So it doesn't always have to be the case. You definitely can trade, just technicals alone and just saying, hey, it's a super hot momentum group. But just know that it might not give you the duration that you're hoping for, right? Like the quantum stocks where, they made a huge move in a really short period of time. And then a bunch of them, came back down 50% or more in a very, very short period of time, versus buying something like NVIDIA, kind of around the areas where I was doing it initially, 160s was the first time I bought it, 170s, a 243 flat base, a $500 flat base. And then they double and triple from there. And then they still hang out near highs for a fairly long time. So, even in ANF, right, where you catch a good earnings breakout and then it just goes for hundreds of percents. So one of the first things you want to think about is what are the leading groups? And then take it one step further. What has the best technical setups in those leading groups? And then take it one step further. What stocks have the best fundamentals in those groups? So, and then obviously for your playbook, it's like, what are your entry tactics, right? Are you looking at a classic Mark Minervini VCP? Are you looking at a simple flat base breakout? Are you looking at undercut and rallies? Are you looking at, so there are your setups that you like to trade. Are you trading earnings gap ups? Are you trading high volume closes? Just understanding then the setups that you're also trading there. So a lot of little nuances to that question, but effectively to say you want to focus on the stocks that are in the strongest groups with the best earnings and sales and cleanest technical setups. Got to give it to MSTR, man. Lily's another one that I was watching. I just couldn't quite get involved in this dang thing. Didn't think it was perfect, but it's going. Spotify's another one. Morning, Amon. Good morning. This Costco to me, this Spotify to me looks a lot like it's just one step behind Netflix. Where this thing just kind of gets over this little neckline, grinds into this neckline, and then shoots through to all-time highs and then goes beyond that. Spotify feels the same. We'll see. It's got earnings soon. I had this thing, 560s, if I'm not mistaken. I could look right now. 560s, and it's, shook me out, kind of violated my sell rules a little bit. Took a small little loss in Spotify, in Uber, and in CrowdStrike. I rebought Uber and CrowdStrike, and they're both working great, but kind of stinks, right? Yeah, I had 568.86, and then looking at it now, it's like up $60 from where I bought it. I didn't even have that many shares, but yeah, Hood too. Hood was another one that these leaders, they all gave these undercut and rallies, right? They barely broke their March lows, washed out just a little bit, reclaimed. A few guys in the room actually have $35 averages. You know, we were going over this undercut and rally setup. So you look at Hood, you looked at Crowd, right? Very similar setup. You looked at Spotify, identical setup. You look at Netflix, identical setup. You look at Palantir, fairly identical setup. So these all did the undercut and rally. And then the best ones rallied right back above all their moving averages fastest. So, yeah, take two was another pain in the butt. Man, I had a friggin' perfect alert on this thing, Judah. Absolutely perfect alert on this thing. Like 215s and change. I just looked at it. I was just like, all right, yeah, I'm also buying Uber and I'm buying Uber and CrowdStrike today. So I was just like, I'll just add two, you know, and then I didn't take this thing and now you're up, 10 points right from there. Very annoying. That's a good way to look at it. Everybody's listening. I listen to music effectively all day long. I was watching the $1 Million Secret on Netflix for the flight while listening to music, like all the time. And when Grand Theft Auto comes out, I might be finding a new hobby. Kidding, but seriously. Frustrating, but whatever. JP Morgan back above the 200, now back above the 200. So many names had massive washouts, man. Dash is another one of those that's just trying to find, a bottom. It looks like. Dash is another name I like. I like Toast too. So many of these names look the same, right? They put in their low, they reclaim their March lows, they put in a higher low. This one did it right at the 200. I like Toast. It's got this super clean little neckline. A lot of these names, they look so similar. Hood did the exact same thing, right? You put in your low, reclaim March lows, put in a higher low. This one just did it against the ascending 10 and 20, basically. And then you've got this clean neckline. Uber is effectively the exact same thing, just a little bit stronger, right? You put in a low, put in a higher low right above the 200, clean neckline. CrowdStrike was the same thing. They all did the same crap, right? Put in a low, undercut and rally, reclaim the 200, put in a higher low, and then, clean neckline at 400. They might as well have been the exact same charts, which just goes to show you how correlated the market is. So, you do need to be careful and thoughtful of that, your stocks are actually moving with the market right now. Some are just moving better than the others. And it's mostly, because of their relative strength, but they all are kind of moving together right now. Do I ever buy a leverage ETFs and leading stocks? It depends, right? There are times that I have before because they move a little bit faster and, it's not $1,000 stock. Like I've done it with like Tesla because it's very liquid, TSLO. How do I think MSTR earnings will go? You're confused on how they make money these days. They make money when Bitcoin goes up. Otherwise, their actual core business, which is not I mean, they're a Bitcoin buying company at this point, right? They don't have like a real software company, although they say that's what they do. Their actual business doesn't really make money, right? MicroStrategy itself, or Strategy as they call themselves now. But yeah, MicroStrategy, their software business doesn't really make money. Black Cat, you can find it on my X page. How was Miami? Miami was beautiful. Weather was awesome. Heck yeah, I love hearing that, man. Yeah, swing trading for me is, in general, is a whole lot easier. Longevity is going to be better, in my opinion, because once you learn progressive exposure and proper position sizing, it's time that pays you, not position sizing. When you day trade, you have to not only come up with like a new idea every single day because you go to cash every single night. You have to then come up with a bright idea every single day. And then you have to oversize it because you're playing for a smaller percent move. So you really have to like nail your entries, and that just becomes too much of a pain in the butt, right? With like swing trading, I could be wrong like 70% of the time and still make an absolute fortune. So, I think that's easier for most people. It resonates with most people, in a market with like so much uncertainty. Imagine like needing to be right. Imagine needing to be right. Like so often, like needing to be right 70% of the time, or 50% of the time, or 60% of the time, 80% of the time. That's what day traders have to be. And it's an issue of position sizing. Some day traders can get away with a little bit less of a winning percentage, but when you see like like whenever you look at someone's stats and they have like incredibly high win rate, and which I had when I was a day trader, you had to. When you have a super high win rate, you know that they're just scalping really, really small time frames. So I prefer to not put myself under that kind of pressure, and then just focus on, what are the groups that are going up? What are the groups that are going down? Do they have good technicals and fundamentals, and align myself, with setups that I understand on it, and buy them on a day where the market's going up or down. Do I think Celsius is ready to go? No, not yet. And if it's gonna, if it's really gonna go, I mean, it's almost there. Still a touch extended from the 50. Let it build out a cleaner base. I also think this one still has a ton of overhead supply. You might be better off in something like, you might not love it, but Monster, or this one's slow, but like KDP. I don't know. Neither. You're going to keep your eyes on the beverage names, right? That's one of my best suggestions too. Whenever you like a particular stock, go looking around the market to see if like a few of its peers are also acting well. If you have some of their peers acting well, then that'll help you make your decision. No, I wasn't getting any exposure, Bracco. Good question. On those days, I was actually just playing TQQQ. So like that Monday, I played TQQQ, and then you had like that news that there was going to be like a 90-day pause, and it was like by Bloomberg, by Walter Bloomberg, the Twitter account. And then obviously on Wednesday, you got that news again. And I played it both on Monday and Wednesday. But once you heard that the news was false, right? I got out. It was a super nice game. And then on Wednesday, the second trade. And part of the reason too, this is actually a good lesson, when you don't really have any stock setups, right? And I'm not just looking to like buy individual stocks at lows. The way you would look at it is, if you end up picking the wrong stock, right, the market could absolutely rip, but then the stock that you picked could have bad news and it could stop from going higher with the general market. But when you think that the QQQs are washed out, I would rather play the TQQQ, because you can have Tesla acting bad, but then on the flip side, you could have Apple, Microsoft, Amazon and, you know, pick Meta or NVIDIA, any one of those. So you just need like 4 of the 7, and the QQQs could be acting really, really, really well. But if, like, let's say you pick Tesla at the lows, and for some reason Tesla had some kind of bad news that there's a bad reaction, you could be missing the entire upside move because you're in the wrong individual stock. So in moments like that, I would rather go with like a leveraged ETF and then just say to myself, like, you know, I don't want to pick NVIDIA and then all of a sudden NVIDIA's not moving because of some chip news that Besant said or Lutnick said or Trump said. But, you know, Apple and Microsoft and Tesla and Google and Amazon are ripping, and the QQQs are up 4, 5, 6% on the day. But then you're missing the upside because you took NVIDIA, right? So it's like, just kind of eliminate the individual stock risk at that point and just go with the ETF is sometimes how I choose to play that, until I'm starting to notice higher low setups, pivots, stocks breaking back through moving averages, like a Netflix, like a CrowdStrike, like a Palantir, and then start to get involved from there. Vic, great question. I don't position trade in retirement accounts. This is my rule of thumb. I'm always a swing trader first, and a stock has to earn the right to be position traded, meaning through its own strength. Then I get to position trade it. But I'm not just a position trader until the stock earns that right. Yeah, ADMA, the biotech. I've had this one on watch a handful of times too. Yeah, God bless, man. I wanted this thing through this flat pivot. I thought it was taking off on this day. You know, just didn't do anything about it. And it came back kind of nasty the very next day. Got it all right back, right through the pivot. And now look at it, right? A couple days of sideways, you know, new high. They're making these things, Judah, by the way, they're making them impossible to own. But now you're at a new all-time high. I mean, awesome to see, but they're not making these things easy. I will tell you that. Yep, correct, Bracco. 100% agree with that. VRT, VST sitting on the 50. Yeah, but still so much overhead, right? Like, compare it now to when I bought Netflix, compare it now to when I bought CrowdStrike, compare it to a Palantir, compare it to right? This is just already lagging the market. Yes, it's going higher, but it's lagging, right? I don't want to be in this right now. There are already better stocks than this. There are stocks that didn't lose the 200 and are above the 200. Would I rather be in VRT or would I rather be in Hood, right? I'm in neither, but which would you rather be in? The stock that didn't break its 200 or the stock that's still well below its 200, right? The answer should just be visually. You should visually be able to see the answer in your head. Do I want to be in VST, the stock that's hardly above its 200? I mean, literally by cents. Or again, do you want to be in a Toast that reclaimed its 200 and built a higher low right on it, right? Or do you want to be in Spotify, a stock that's effectively right at all-time highs, right? Like, the answer should be pretty obvious. Or do you want to be in a Zscaler that's above its 200 and maybe about to break its flat base, or, you know, something like CrowdStrike, or maybe some of these aerospace and defense names, right? It's like you want to be in the things that go up more than the market when the market's going up, and you want to be in the things that go down least when the market went down, right? That's how you find your leaders. What went down the least when the market was going down? Yeah, I'm not going to talk about the quantum names. They're still down 50% from all-time highs. Again, when you think about groups and there being 100 and, you know, however many groups, I mean, I'll tell you right now, IONQ is in group 112 out of 166. For instance, CrowdStrike's in group 94, Hood's in group 69, Toast is in group 64. So it's like when you're just dealing from a relative strength, Palantir's in group, yeah, that one's a little bit low. 1 month, it's group 39, right? So it's like You really just want to be in the names that are acting best, strongest group strength. You want to be in the groups that are acting best, right? You don't want to be focused on the bottom quarter of the market. There are so many stocks to own as a swing trader potentially, right? Things that just quote unquote have nice looking setups. But then how do you take it one step further, right? A lot of things have nice looking setups. Yes, I did trim. I had a market on close order on Friday. So just from a sub $99, sub $100 average, I got trims off right into the close on Friday. Third of my position is gone. Yeah, you could use MarketSmith, you could use Deep View, or you could just use your eyeballs. But yes, if you just want like a number attached to it and just say, oh, that's group 146 out of 197, right? Or, oh, that's group 12 or group 8, group 5, it's like it just makes it a whole lot visually simpler to just say, this is the group that they're in, right? There's no disputing that. Again, that's not to say that IONQ can't climb its market leadership, but this effectively means when the market starts to go down, the quantum names go down least. When the market starts to go up, those names will go up more, and they'll start to climb the relative strength leaderboard. I only need, you guys got to remember, as a swing trader, you only need like 8 to 10 names to be fully invested. I want to be in the 8 to 10 best, not my 8 to 10 favorite. My favorite, if your favorites are solar stocks and you're just been waiting on solar stocks, you probably have a terrible average by now and are sitting with fat bags, right? But I don't want to be in my quote unquote favorite. I want to be in the best. How do I define best? In the best groups with the best earnings and sales and the best technical setups. I'm not calling VRT or VST bad companies, or IONQ for that matter, even though I know it's not that great. But even though I know VRT and VST are legitimately good companies, they're not the best to me, right? I want to be in the things with the least amount of overhead, in leading groups, good earnings and sales, best technical setups. Let moving averages tell you what the best technical setups look like. If you're not even above the 200 yet, you're definitely not the best technical setup, and you're definitely not a leader. A leader is a stock at all-time highs in this market, right? Netflix, TTWO, right? There's your best stocks. FinViz is fine too. FinViz is fine. Just click on groups, go to groups, hit the little drop-down box, go to industry group, scroll down to 1 month, 3 month, and 6 month relative strength. No, I don't buy stocks right before earnings. I would rather buy the reaction to good earnings than to be in right before earnings if I don't already own it. So. And by the way, to whoever mentions VST, why wouldn't GEV be the better choice? GEV would absolutely be the better choice. Right? It's above its 200. It gave you a clean undercut and rally effectively right at the 200-day, reclaimed the 200-day, put in what's a very simple higher low. So here's your low, here's your higher low, right? And then a clean little neckline, and then broke out, on good earnings, right? And it's, has much less overhead, meaning whoever's bought this thing, right? They're only 20% away from all-time highs again. If you were like, oh, yeah, I love VST, VST's got to play catch up. Okay. So VST now only needs to go up 55% to get to all-time highs. 20% or 55%, right? There's bag holders galore in this thing compared to the other one. So again, if they were in the exact same group, which effectively they are, right? Which one's got the better technical setup? When building up to 10 positions, no, I don't do 2.5% position sizes. I mean, it depends the market, but oftentimes I can go right to a 10% position size on a stock right away in a good market. In this market recently, like Netflix was a full 10% position size. It was actually a little bit less. It was more like 7. So don't want to lie about that. It was like 7. Uber was 5%. Palantir was like 6%. And CrowdStrike was about 5%. So, yeah, I mean, 5 to 10% is a good starting point. And then if they give me more ad spots, I will happily add another 5 or 10% and treat it like a whole new setup. So, and then like if I feel like I'm onto leadership, I want to be, 15, 20% built into one stock, right? And I want to have, a 20% position in an Uber, a 20% position in a CrowdStrike. No, man, I'm not in TTWO. If people keep talking about it, I'm going to start to cry. I had a 215 and change alert, and I just looked at it. It was the same day I bought Uber and CrowdStrike. I already had Netflix and Palantir working for me. I mean, I wish I took it, dude. I just didn't. So trust me, I feel like I failed myself. Seriously. I was staring right at it. I called it a nice setup. I had an alert on it. I mean, I did everything but click the buy button, and it gave no headache. So sucks, right? I also wanted NVIDIA over 99.5. I wanted BABA over 111.5. I wanted Tesla over 259.5. So it's like, if I had bought those 4 names as well, I would already be long 7, 8 names right now. And like the best names in the market, in my opinion, some of the best names in the market, in my opinion. So obviously, NVIDIA and Tesla are still below the 200. But with that said, the market's not really going to go higher without, some of these mega caps. So, but yeah, I kind of butchered TTWO. I didn't really mind missing NVIDIA or BABA because they just gapped over my spot and I wasn't going to be chasing. Oh, very nice. You got Palantir 102.32. Yeah, I'm in like 99s, high 99s with Palantir. Thoughts on HIMS? Everybody asks me about HIMS every single time. And brother, I love you. Look at HIMS visually. This thing now, while it could bounce off this 200, one, I don't see the momentum. It's still below the declining 50. It's down still 60% from highs, so bag holder galore. I mean, what's there to love? The fact that it's come down a lot and you think it can go back to 70? The fact that you've seen big momentum on it before? I mean, it's below a declining 50 day, right? So if I only need to own 8 to 10 names to be fully invested, why would this one make the cut? Right? If for a swing trader, you only need to figure out a way to get all of your money in 8 to 10 names. Is this make the cut as potentially one of the best 10 names in the market? I don't think so. I mean, not even close. Not even. I could rattle off 10 names right now off just the top of my head that I'd rather own, right? And we'll just wait for it to set up again, right? A Palantir, a CrowdStrike, a Zscaler, a Tesla, Netflix, Spotify, Uber. I mean, potentially Toast, potentially DoorDash. I mean, like, maybe MSTR. So, yeah, I mean, take that for what it's worth. I mean, there are literally so many names just at the moment. Maybe something like Geo, maybe Melly, maybe Fortinet, FTNT. So, yeah, there are just, not saying that HIMS won't go to 40 again, right? But it's just at that point, you still got to churn through a bunch of overhead, and you've got stocks that are just acting better. I'd rather potentially own some gold miners if gold turns back up, right? AEM, GFI. No, Reddit's another one. Good action on Friday doesn't mean anything, Corey. Good action on Friday means, I don't want to be brutal about it, but it means jack shit. Right? This stock's got to go up. This stock has to go up. Bless you, babe. Thank you. This stock has to go up 90% just to get back to all-time highs, 90 effing percent. Yeah, no thanks, dude. No, the stock has to double just to get back to where it was. Compared to like when I bought Netflix, and I wanted this thing at 854, even at 854, the stock only needed to go up 20% to get back to all-time highs. When I was mentioned it again in the room at basically 950, it only needed to go up 11% to get back to all-time highs. And when I finally bought it, it only needed to go up 5% to get back to all-time highs. Guys, I don't want to be in a stock that needs to go up 90% to be back to all-time highs. That just tells you how many bag holders it's created on the way down. And the amount of chugging of, like, the market would have to go up for Reddit to get back to new all-time highs. The stock market is going to need to be above its all-time highs by 20% damn near. I mean, effectively. Right? The ES, when you look at the ES, or just, for instance, the QQQ. Okay? The QQQ is going to need to V-shape recover and go to 600, 650, and then Reddit will be back at all-time highs. Okay? The QQQ is going to have to go up 200 points from here for Reddit to get back to all-time highs. Think about that for a second. So, no good. No good. Reddit is, again, you might like the company, but as a swing trader, you only need 8 to 10 names to fill out an entire portfolio. Why would Reddit make the cut? Reddit would never make the cut, just on technicals alone. On the flip side, I've got some positives to say about the stock. They've got accelerating earnings and sales. I mean, that's good. But their sub-industry group is middle of the pack. In the last 1 month, it's group number 106 out of 166. In the last 6 months, it's group 78 out of 166. It's middle of the pack, right? Focus your energy on the top third of the pack, on the top fifth of the pack, right? Be in the top 20, be in the top 30, be in the top 40. Stocks with the least amount of overhead. Stocks that are acting like a beach ball, right? The market goes down, they go down the least. The market goes up, they go up way more. The market is kind of flat, they're green again. Jack, good morning, brother. Nice to see you. Miami was absolutely beautiful. I had no idea that Tim also did the Chart Fanatics interview. It was a lot of fun. Words of Wisdom was great. I had no idea he was there. Miami was awesome. Hanging out with Ted Connor and Alec was a blast. Like, eating food galore. It was weather was beautiful. So, in good company. Oh, Corey, you hate the company? Yeah. I mean, I wouldn't say the word I hate the company, but definitely not for a swing trade. Definitely not happening. Great question, Stock Maniac. You're on the good questions today, my friend. When is it too late to start building a cushion ahead of earnings? I'd say you need a week, right? You need a week. You need at least 5 to 10 days. I mean, would be nice. The idea is that when you buy, a stock's going to give you, a 3 to 5 day push to allow you to trim anyway. So if you buy something and the market's acting well, and then you buy something and then it pushes for 3 to 5 days, it's going to allow you to get some trims into that strength. And then again, your stop on the rest should go to flat, right? Like let's say you bought a $20 stock and by the end of the week in 5 days, it's at 23 or something like that. And you're up, 10, 15% on your position. You're going to trim off half anyway. And then your stop should go up to break even on the rest. But then if you have a really nice earnings reaction and then you get like a overnight gap up, you can then buy if you're still in a healthy market, like a 5-minute opening range break on the earnings gap up and just like re-add a full position, treat that like a new position, keep your ads from lower, or keep your initial buys from lower. And then your ads, just treat those like a brand new position, with a stop at low of day. Or if you're using a high volume close, good above the high volume close, bad below kind of deal. But yeah, good way to think about it. And, if you got like 5-6 days before earnings, if it pushes for 3 to 5 days, it gives you a chance to peel some into strength and then, hold for the reaction. Especially if you get like a 10 to 12% move. And if you want to take it one step further, I don't really care for implied volatility, but then you can go one step further and say, well, what's the implied volatility? If you're up 10 to 12% and then the implied volatility is like 6%, then all of a sudden, even the options market's kind of telling you that you're kind of safe. So. Yeah, Stock Maniac. Thanks for the question, man. What would I look for in a stock like PEGA? Let's see. PEGA. It already had an earnings gap up. This one would have been like, look at the volume that came into this thing. The high volume close was a really nice spot. So 88.55 or 88.56, watching 88.56 be the level that holds, or 88.55, sorry. And then the second day, it was buyable as it came right back through the close. Yeah, looked pretty good. A break through the high volume close. Nice gap up on earnings, back up above the 200. Kind of gave you an indecision candle, but look at the close. The second day is a high volume close setup. So I suggest everybody study Amit Rai from, he did this interview on Traderline. Pete, nice question. How do I treat the initial buys if the stock starts acting bad? Very simple. I cut it. When I buy something, my stop is usually low of day. And if the stock is a little bit slower of a mover and it was even really tight the prior day, I might be using prior day low. So if it starts acting bad and breaks prior day low, I'm out. Right? I'm out. I don't argue with it. And I don't average down. I never average down, ever. I mean, ever. So I'm not going to be, the market's telling me I'm wrong. I'm not going to be buying more. So. David Hunter and Henrik Zeberg say that get ready for a blow off top coming in, the worst recession, depression coming after. Any thoughts? If I've got stock setups that are acting well and breaking out of key pivots, I don't give a shit what they say. And the reality is that might actually be happening, right? But maybe gold is going higher or Bitcoin's going higher. And if there are setups in gold or Bitcoin, then I'll buy that. If crude energy or crude oil is going up, then maybe I'll buy some crude oil stocks, right? If, copper is going up, then I'll buy some copper. If, steel is going up, then I'll buy some steel, right? I don't care about what other people think in terms of depression, this and, recession, that. If I've got setups and I can manage risk from my setups, and then I'm getting follow through from my setups. And then the flip side of that, Jeff, if there are short setups, I take those too. So if the market wants to burn and bleed and go to hell, guess what? I could flip charts upside down, and if they look good on the long side, that just means they're good shorts. But I'm okay shorting stocks too. Stock gaps down on earnings, they give me a little bear flag. If stocks gap down on earnings, I could take a 5-minute opening range break to the downside. If stocks want to burn, just a few weeks ago, I was short 7 names. I don't really care if stocks are going up or down, as long as it's trending. So if we want to go into this worst recession, doom and gloom, depression, recession, I'm going to be shorting, and I'm going to be making a ton of money. I don't care one way or the other. It really is irrelevant to me. Right? I'll just be short the crappiest groups, I'll be short technical setups that I understand, and I'll be just trend following like I do long or short. Makes no difference. So people's opinions do not matter to me. News does not matter to me. Really, it doesn't matter. If I start thinking like that, but I'm long bias, it's going to mess with my long bias. It's just a setup that I'm managing risk in real time on. I don't even know who that is. Yeah, I don't even know who David Hunter is, because the second I'd see him, I'd probably just ignore him. Thoughts on GRRR? I'm short. I'm short from 23, and it looks like shit. Yeah, I shorted this thing on 4.2, and it's just been building what looks like a bear flag. It's not even back above the 50, so looks terrible. It looks terrible. Anyway, guys, a couple more minutes for me, and I am heading off. I will see you guys tomorrow early in the morning. I'll be back on at 7:30 a.m. Central Time, 8:30 Eastern. But thank you guys for showing up. Looks like a bunch of you guys showed up. Thank you guys for the questions. Ton of you guys had really great questions. Tesla's not a short for me. Final one, SJ. Tesla is not a short for me. I wanted it over 259 as a long. If it can get over 290 and build a little bit above 290, back above the 200, and the market continues to act well, I don't want to get negative on it. Could it be a short? Yeah, but the market will have to start to break down a little bit. Tesla will start to have to re-lose the 200, and then yeah, maybe it is. But for now, not something I necessarily want to short right now. I'm actually starting to get stopped out of shorts, right? I'm getting stopped. I recently just got stopped out of AVGO, and I got stopped out of NOW. So, and I was short from much higher. And I didn't do, I actually covered this one in Chart Fanatics. I did not do a good job covering down here, unfortunately. And then I got stopped out on the gap up on earnings. So is what it is. I had a 988 average, so I did get some covers off a little bit lower, but obviously could have done an even better job, covering sub 700. But, hindsight's 2020. My crystal ball doesn't work. Only, my risk management does. But still a really nice green trade. But yeah, I've been stopped out of a couple of shorts, and I now have some longs working. So I'm taking that as feedback in my portfolio, and I'm still focusing a little bit more on the long side if the setups are there. And that's really all I'm thinking about at the moment. If names start to break lower and the market starts to act a little bit worse, I'll probably get another short setup or two on. And then on the flip side, I'll start to get stopped out of my longs for flat or for small green at this point. So what's the most I will concentrate into one position? 20%, about 20%. Sometimes a little bit more, depending on how slow the name is. When I bought the NVIDIA breakout, it's about 20. It was a little less than 20%. But anyway, guys, I love you all. Thank you for being here. I will see you guys bright and early in the morning, back in 23 hours for you guys. So we will talk soon, and have a great trading day.